Hello everyone, how you doing? As you can see, the numbers are on the board, so you already know we're getting ready to do some velocity banking. But before I get started, I just want to give a shout out to Tony Lewis for being the 200th subscriber. I hit that today, so I'm pretty excited about that. I want to thank everyone else that is a loyal subscriber. And to prove that, I'm not too technical or savvy or know about marketing or editing or anything like that. But I was looking at YouTube analytics, and it says that the average viewer, you, watches about 7.5 minutes of my content. At any given time. I'm assuming. I guess that's what that means. But I guess that just goes to show that you guys are really liking what I'm talking about. So if that's the case, without any further ado, let's dive in to this scenario that I'm working on with someone currently that is a YouTube subscriber. Alright, so if you are considering becoming a part of this family, I want you to hit that subscribe button. I want you to like this video. I want you to leave a comment below and tell me what you think, alright, and how I can help you. Okay? So, here we have a gentleman that is making anywhere from $2,750 to about $3,400. Okay? And their expenses, I wrote two numbers because I wasn't too sure, right? But I want to say that it's right in between these numbers right here. Very accurate numbers. And their debt, $43,410. And their cash flow is between 300 and 800. They gave me some original numbers that was 520 to 840, but I like to lowball people on cash flow when I'm doing scenarios, just to show how effective this strategy really is. And it gives them that room where if they're a little scared to make those chunk payments, or they're still on the fence, like, Denzel, I don't know if this thing really works or not. Hey, I'm going to use this cash flow number right here, which I definitely know this person has each and every month. Okay, I don't know for sure every month they'll have 8 or 6 or 7, but I know definitely they got about 300 cash flow after expenses are paid from the income. So, in this video I broke it down a little bit more because I've been getting some feedback that it makes sense, but there's something missing for you. So if you're that person that you're like, you've watched like 2 or 3 velocity banking videos and you're just like, I get it, but I don't. or like it makes sense. You've proven it on the board, but there's something missing. So I laid out this person's entire, pretty much their expenses that we're going to use to do velocity banking with. Alright, and I'm going to show you exactly how I got these numbers in play. So whenever I'm working with someone, there's 4 numbers that I need to acquire first, right? The income, the expenses, the debt, and the cash flow. Okay, I gotta know these in detail, down to the dollar. Okay, so before you fill out my form below, make sure you have these numbers in line before you submit it, right? Even if you don't know it totally all the way, it's okay. You can still fill it out and we'll work together on. I'll show you exactly how I do that. Okay. Now, another thing I do is I split up all the debts. So I see exactly the interest rates that they're paying and the due dates and the monthly minimum payments that they're making on all their debts. So, step 1, what can this person do to start velocity banking? right? Like I always say, we want to target the cash flow, right? So we can fill out our W-4 properly. We can make sure that we're claiming the right allowances, okay? We can open up a checking account with a promo, okay? And just transfer how we get paid to a different checking account so we can get a one-time promotion, anywhere from $100 to $250 one time. Boom, that's one way. And then step 3, obviously, we gotta acquire a debt weapon. What is a debt weapon, class? A debt weapon is a tool that allows me to use, like a checking account. The interest is calculated simple and the credit is revolving. Okay, the debt is revolving. I can use it again and again and again without being penalized. Okay, that's a debt weapon. Does this person have a debt weapon? Well, they've got 3 credit cards, right? The CC stands for credit card. And they got 1 loan. Is a loan a debt weapon? No. Why? Because it's calculated, amortized. Therefore, it is not a debt weapon. Is a car a debt weapon? No. It's a liability, right? It's just a debt. Got to pay it off. Credit card, though, however, is calculated simple. The debt is revolving. Anytime I make a payment, whatever available credit's in there, I can use it again. Cool. And the interest is calculated simple. Alright, so boom. I'm going to tackle that. Out of the 3 credit cards, they've got one that they owe $950 on, another that they owe $10,900 on, and the other one there's a 0 balance on. Okay, so we're not going to worry about the 0 balance. What I would suggest to do first is I want to get a little victory in here. And I'm going to tackle the first one. Okay, so the minimum payment on this that they're paying right now is $80. Okay, the interest rate I think is over 10%. I'm not too sure, I forgot. But here are their expenses, right? So this person has cash in their checking account. Before he pays LA Fitness, food, car insurance, the gas, miscellaneous, before he uses his cash to pay that, we're going to add up these numbers. We're going to make a chunk payment of $950. Okay? I just killed that debt. First month. Gone. But I have expenses, Denzel. Okay. We're going to use that same credit card. Swipe, swipe, swipe. To pay our expenses. The $80 plus my cash flow of 3, totaling $380, is going to stay in there. Not going to touch it. Okay, so based on his cash flow, this month of September, anywhere from 1 to 2 months, this debt will get killed. Done. Quick victory. I just increased my cash flow $80. Now, moving down the timeline, okay? The second debt. We're at $10,900. What's nice about this one, 0% till May of 2019. And right now we're in September 2018. So, the goal is I want to clear this out before I calculate any interest. Okay, because here's where people get confused, where they buy furniture, right, or expensive hobbies, or they acquire a lot of debt on a credit card that has 0% for 30,000 months. Okay, hey, don't pay interest till 2023. If you wait till 2023 and you don't pay off that debt, guess what? They tack on interest of the whole entire thing. And that's why people stay in debt for so long, because they don't realize how interest is calculated, how it gets accrued. They don't understand velocity banking, and I'm here to help them. So let's not get on that path. All right, let's stay focused. Stay focused. So the debt, 10,900. Add up these numbers. You're gonna get this number right here. 1875 is going to be my monthly chunk from my income into this credit card. And then what goes out is the gas, the insurance, the food, LA, miscellaneous. Now, what stays in is the 80 from the other credit card, right? That's cash flow added. So $80 plus the 3 of cash flow plus $110 of this minimum monthly payment. Okay? Now what happens is when he makes that first chunk payment, right? He lowers the balance almost $2,000. He cuts off interest from accruing for that month, right? This money is all cash flow that stays in the account. This becomes his savings account. This becomes his Dave Ramsey emergency fund. This becomes his investment. Why? Why would this be an investment? Think about it. Right? If he pays this off, his cash flow is going to go up $110. Okay, that's a better investment than 4%, 2% in a money market, 1%, less than 1% in a checking account, savings account, CD, right? Do the math, man. Do the math. That money is sitting, is not working for you. By doing this, we got money working for us effectively. I didn't have to pay anyone to do it, right? I didn't have to buy a program, a course, nothing. This is my personal finances that we're getting in order, okay? So, we made that chunk payment. Here's what goes out, $1,385, but not all at once, right? No. Right? The expenses are due throughout the month. So what else is happening throughout the month? He's getting paid again. So what's he gonna do? Make another chunk payment. See, what happens now is that we end up making more than one chunk payment throughout the month, right? Because we satisfied our expenses already. The credit card due date, the bill won't be due till 30 days down the road, sometimes even 60, right? Meanwhile, he's making another chunk payment. What is he doing? Lowering the balance. He's still able to pay his bills, right? He never loses his cash flow. What stays in each and every month is the $490, right? Which is the 110, the 300, the 80. That equals $490, right? Plus all the interest savings that gets tacked on into this, which speeds up the process of debt elimination. And if you do the math, 5 to 9 months, done. 10 grand in 5 to 9 months, done. That is before May. What's next? Now is where I'm gonna go ahead, get myself a line of credit. See, there's certain situations in velocity banking where we don't actually acquire a personal line of credit or a business line of credit till after we've killed certain debts, right? Because remember what I said in some of my other videos, how a credit card can be used like a line of credit. The only difference is that we can't funnel all the expenses through a credit card, because there are some things that we need to pay with cash, right? Like rent, the car note, right? Maybe utilities, okay, things like that. There's certain things that we must pay with cash, right? So if that's the case, we're just gonna kill the credit card. So for his situation, that's why I went here first, because it's the fastest way for me to build my credit score, lower my debt to income ratio so that my credit gets better, so that when I go to apply for that, after I've done my homework, right, I've done my radius and I look around for the credit unions and the non-for-profit banks with the lowest interest rate, with a good line of credit for like 10 grand, 15 grand, 20 grand, whatever it is, right? I'll have a better chance of getting that a little later on than trying to get it in the beginning. Make sense? Okay. So, in less than 9 months, we would have killed over 11,000 of debt. Our credit score would go up. Our expenses are down 190. Our cash flow goes up a definite 190 per month after these debts are paid. We go get ourselves a line of credit, and what are we going to tackle next? 2 options. We can do the loan or we can do the car. The loan is the smaller debt. Okay, so we could follow the debt snowball method, where it's, go lowest to highest. You could do the avalanche one, highest to lowest, whatever suits you. Okay, if I did the math, it would probably be more wise to tackle the car, because this person's cash flow is high now. Okay, so we can actually eliminate that car note quite quickly, fast, right? Because if his cash flow is now at, let's say, 490, between 490 and 800, right? He's gonna have some good months now. Okay, he's cash flowing much better. Times this number or that number, or somewhere in between. Times it by 12. Whatever you get is the amount of chunk that we're going to take from the line of credit to pay the car, right? Or to pay the loan. Whichever one you want to choose. Okay? You can play with this. Either way, at the end of the day, we're killing debt at a rapid rate. So this thing can get killed in like 4 months. He only owes like 5 grand on that thing, 6 grand or so. With the car, it's a much bigger debt. I think it's like 25, 26 grand. Okay, the monthly payment is $388 a month. Okay, you do the math. Anywhere between $490 and $800, times that by 12, that's the chunk amount that I'm going to take. And I'm only going to need to make, what? 2 chunks to kill that car note? Right? And I'm using my income. Now, here's where it gets a lot faster, is because now I'm able to dump everything into the line of credit. Everything. And I only withdraw my expenses. Now, his expenses are going to be down 190. Are they not? Yeah. Okay? So it's like what would stay in doing the same numbers, right? Okay. Whatever his same expenses, 1385 plus the 388 plus whatever other, rent, utilities, right? You get whatever that number is. Okay, this is for him who's watching. You would now add those numbers. That's how much is going to exit the line of credit throughout the month. Meanwhile, you're dumping your entire income. And what stays in is the cash flow. Got it? So then in 12 months, this line of credit will be back up to a zero balance. And that's where you make the next chunk payment. And that's where you'll get a car note that would have taken you 5 to 6 years to pay off. You would have paid it off in 2 or even less. Because who knows what's going to happen for this gentleman, right? He could get a raise, right? He could start a business. He could make more money, make more sales. However he produces income, right, can also get added to the cash flow. But looking at it conservatively, dude, by the end of 2020, right, or even halfway into it, my God, this guy will kill $43K, 2 years. Whereas it would have taken him 6, 7. You know what also happens in the process? What usually happens? We accumulate more debt, right? So if he's got Velocity Banking on his side and Denzel on his side and this channel and this family on his side, he's going to stay disciplined. He's going to follow the rules of Velocity Banking. All right, I hope this helps. I really do. If there's something you're still not getting, please fill out that form below in the description and I will help you one-on-one. I do this out of the kindness of my heart. I promise you. All right? So yeah, that's about it. Tuning out. The next few videos are going to be straight Velocity Banking scenarios. So at some point, I know I'm going to reach the right people that really need help. And that's what's been happening. I've been meeting some awesome people in this United States. All over. California, Virginia, Texas, Jersey. Where the Florida people at, man? Come on, reach out. I'm like right here. I can come see you live. All right? So, yeah, that's about it. Listen, I love you. Have a great day. Tune in. Every day I'm coming at you. Velocity Banking. Stay with it.